Oh, time flies, and I am back, guys. And right now, it's exciting. And before we begin, I have a question. How many of you are here are fundraising or planning to raise? Just to know the audience, okay? Others are curious about the fundraising process? More or less, yeah? Okay, cool. So you are up for a treat. We've been learning the whole day at our Founders Academy, which is supported by our sponsor, AWS Startups. You can find them also during the conference around, so make sure you visit them. And from selling your product, from selling your ideas, we are actually right now going to dive into selling yourself to an investor. Because if you're going to build a fast growth company, and you don't want to go bootstrapped way, one of the ways is going fundraising way, and that's a different type of art and sales, how to communicate with investor, what are the do's and the don'ts. And for that, I would like to invite on stage Christoph Solig, who is the pitch doctor, and Fritz Oitman, Action Capital partners, who represents the investment part, just to explore the do's and the don'ts and share their knowledge with you guys. So huge round of applause, and yeah, have fun.
Thank you.
Thanks.
Hello. Okay.
Hello.
Okay. Yes. So I'm Christoph, as you can see by the name that's above my head. I'm the pitch doctor. So for the last 13 years, I've helped startups pitch better. That's all I do. But fortunately for you, today you don't even have to listen to me, which normally what startups have to do, because today we have the person that actually matters in the fundraising process here, because we have Fritz here, who is an investor, and that's what pitching is about, right? It's not what you like or what I like, it's about what the investor wants to hear and what they like. So what we'll do today is I'll just ask questions, okay? No opinions from my side. I'm just here to look good and ask questions. And Fritz is here to look good and say smart things. One thing before we get a little bit into who Fritz actually is, one thing that's really important, what you have to understand is Fritz lives in Bonn. Who of you has ever been to Bonn? Anybody? You've been to Bonn? I'm very sorry for you that you've been to, no, I'm just kidding. And Bonn is one of the towns in Germany. So we're both German, by the way. If you're expecting fun in this session, you can leave now, okay? Because we're both German. So no fun is to be had here today. But he lives in Bonn, and Bonn is one of the towns in Germany that is very famous for their street carnival. It's crazy. I've never been because I'm scared, but it's crazy. They do a lot of drugs. Do you do a lot of drugs?
You don't need drugs.
Alcohol.
You can't have alcohol, you don't need it.
You don't need it.
It's just
okay.
fun.
It's just fun, and he's here today. He's missing it. Okay, can we do a big round of applause just for Fritz that he's missing? Thank you, excellent. Okay, so now let's get to you a little bit. How about you tell us in 1 minute your entire life, the most important bits, to understand how you got to what you're doing now, but don't get into what you're doing now yet, because we'll do that after.
Okay. Yeah, I'm Fritz, have studied economics in Bonn and Berkeley, then spent 12 years with McKinsey. After McKinsey, I founded my own company, OnVista. It's a fintech. We IPO'd it and 7 years later sold it. Then I was running 2 e-commerce companies selling consumer electronics. Was part of the supervisory board of Xing, that's a German version of LinkedIn. And 7 years later, finished all that and started to work for Acton.
Amazing. Okay, so that was a very good 1 minute summary of a life that was probably very interesting. Now let's get to Acton Capital Partners. Because what we're talking about is pitching to investors. But let's be honest, there is plenty of investors out there. You're not that special, okay? All of these startups, who has a startup here in the audience? Quick show of hands. Awesome. They have billion-dollar ideas. They have amazing teams. They can get anybody's money. We're turning it around. Now you have to pitch us. Why should somebody take your money rather than somebody else's money? What's better about your money? What does Acton Capital bring to the table that somebody else doesn't have?
Yeah, let me first say who we are investing in, because that does comprise the range a bit. We do invest in companies that are in the A or B round, typically investing 5 to 15 million euro. We do invest in Europe and North America, and we like to help companies that have proven that their business model is working, they are ready to scale. And why us? Because we are not chasing the ones who are in a hype. We are chasing the ones who want to build a company that's there to last. So we want to help founders building something and benefiting from our experience. I have, as you have heard before, have some operational experience, and all of my colleagues have similar experience. So what we typically do is we are not just a board member, but we are really an active board member, providing trust, but also trying to get your trust in whatever we can help you, be it operational, organizational, or strategic.
Okay, that's a pretty good pitch. What I want to do today is basically, I want to ask you things, what you feel about pitching, what you think is important, what you think sort of matters. But I quickly want to tell everybody, it's one man's opinion, okay? But it's an important opinion because investors can be quite different. So what I want to try to do during our conversation is I want to try to point out things where maybe there's differing opinions in the realm of investors. And that can be earlier stage versus later stage, but it can also be people from different countries prefer different things. So we try to point that out. And as you said, Fritz, you're a later stage investor, basically. So we'll try to talk about early stage, sort of what would be applicable and what maybe wouldn't be applicable, because pitching certainly changes during your startup's journey. In the beginning, you have to look out for other things than sort of later on, and once you're sort of Series D, Series A, it becomes more of a numbers thing than probably in the beginning. But we'll get to that. One other thing, we'd love to get questions from the audience. I was told we have 2 people with microphones that we can send to you if you have a question. So if you have a question, just raise your hand and keep it up, okay? Until I see it. At that point, I'll point to you. Can you raise your hand as an example? So if he raises his hand, I wouldn't see it. I would be talking to Fritz, and then I'd be like, hey, you have to keep raising your hand. Come on, a little bit. Yeah, okay, thanks. So I would be talking to Fritz. Then you have to keep raising it. Thank you.
Do some exercise now.
So now, yeah, you did your arm workout. It's legs tomorrow. But keep the hand up, please, for 1 minute. Okay, so I'm talking to him. Then I see it. Then I'll make like a little gesture to you. Then you can take your hand down, because now I know there's somebody who asks a question, okay? Thanks for the demonstration. That worked really well. No, but now you know, okay? If you have a question, just raise your hand, keep it up, okay? Be annoying, because we will answer your question. And also, Fritz has already agreed to spend the next 5 hours after the session also answering all sorts of questions over there. He does not have plans for tonight. He's just here to help all of you, okay? We'll be standing over there. You'll see us. Okay, let's get into it. The first question I actually have is, how important is pitching? Does it matter?
Of course. If without you pitching, I don't know what you're doing. So get my attention. That's the best thing you can do.
So is it just about, I need to understand what they're doing, and it doesn't, like for that, it just matters that we get into the same room or whatever, we're in a situation where we pitch? Or is the quality of the pitch, does that make a difference for you?
We have actually invested in companies that are lousy pitch, but the quality of pitch is really helpful and important. So the first thing I need to understand is, what are you doing? And even better, before you do that, what is the problem you're solving? I've seen so many companies telling me, here's a solution, chasing a problem. I'm not for that. I want to have real customers having a problem, a pain point, and I would like to see how you solve it. That gets my attention.
Okay, so that's the first thing you want to know.
Yes.
No, okay, not traction, numbers, something.
No.
You always want to understand why are they doing what they're doing.
And be aware, I have no idea before. So let me, if it's a written document, try to think you explained it to your grandma. And because I might be completely out of your industry. So let me easily understand what you're doing, what kind of problem you're solving, and why you do it better than others.
Yeah, that's definitely something I agree with. Always involve your grandmother in your pitch, like when you're building your pitch, because she can be very helpful. And other people's grandma. Okay, just grab them off the street, bring them in, say, hey, I need to pitch to you because I need to pitch to Fritz tomorrow and I need somebody to sort of emulate his knowledge of the industry. I think a lot of investors say that. They always say, like, they always make themselves sound stupid, but they're obviously not. But they always say, yeah, I don't understand the industry, but I think they understand a lot about a lot of industries probably.
Yes.
Certainly the ones you'll end up investing in.
Maybe, probably even, but I'd like to understand how are they explaining their product to their customers. Because that's also, if you can't explain your product or explain what kind of problem you're solving, if I don't understand that, how should your customers understand it?
That's a great point. Because I see investors all the time when they do pitch feedback, like they do that a couple of times a year just for the fun of it. They always give great feedback, and a lot of times somebody pitches terribly, and then the investor basically says, do you mean this and this and this? And they immediately do like the perfect pitch for what the startup said. And then the startup is like, yeah, exactly that. But what you're saying, you don't want to have to do that work. You want to see that the founders are actually able to tell their story in a good way, because otherwise they'll fail once they leave the room and they do it somewhere else. So pitching is important. Do you think that startups appreciate that? Like, do startups do enough work on their pitches, too much work on their pitches, or something in between?
Everything. You see founders spending too much time overcomplicating it. In essence, it's not that difficult. But you should have some time that you put into it, because you have to think of who is the one I'm talking to. What kind of perspective do they have? How can I easily get their attention? You have to see their 5, 10, and for early stage investors, probably 20 or 50 startups they're looking at each week. And so make sure that the first 1.5 minutes I have, you get my attention. Then I dig deeper. But it's like marrying. If you're attractive, that's the first win. If you're not attractive and trying to close everything down, well, that's hard for me to get close to you. But you want me to get close to you. So I think that's the important part. Get my attention.
So you already said 1.5 minutes. Is 1.5 minutes what you sort of give to a startup to say, if I don't get excited in the first 1.5 minutes, we're probably having problems, or?
At least I would advise the founder to think that way. That helps. I'm a bit more generous, but if after a couple of pages I still don't understand, what are they doing? I still don't get any clue. I get angry because it takes my time. I've seen 60 pages or 100 pages pitch decks, and I didn't get a clue. So it's easier if you confine yourself to, say, 10, 20 pages where I really get insights, and then there may be backups. That's completely fine, but get me attracted.
So how do you consume most of your pitches? Is it pitch decks that you're being sent? Is it conversations you have at conferences like this? Is it you're in a jury and there's pitches on stage? Maybe not Series A, Series B anymore that much, but...
No, it's all of it. And it's also former investors or early stage investors who say, here's a company, they know us, they know the company, have a look at it.
And then do they do the pitch for the startup? Is that sort of already the first hurdle that the startup takes, have their investors?
There's a short blurb in the mail, and or they call us and then say, here's someone, I get you in touch, but it's a very short one. That's really 1.5 minutes. It's not long, and it really helps you getting an idea, because the nice part of these introductions is the investors, the early stage investors, they know the company because they're invested, but they also know several investors. And they don't try to sell a company to me if they feel like, no, they don't invest there, that's not their thing, or it's not good, because they want to have a good relationship. Secondly, they also don't want to have their startup getting a bad investor, because if they know me from some different boards. So these warm introductions, they're extremely helpful, because somebody who knows either side has already given some thought into it.
Yeah, because that's something that's always fascinating to me, is sort of what happens behind closed doors, what the startups don't see. Because when they pitch to their investor, the investor invests, then how do they carry that to sort of like the next round of investment? But the way you say it is basically they don't do a lot of, like you don't talk in depth with the investor because you want to hear it from the founders directly.
Once in a while you do that, but most often it's just a very short intro.
Yeah.
So also as a founder, be prepared. We still don't know much. So the pitch deck still has to be a good one.
So in your company, who sees the pitch deck first? It's probably not you right away. It's probably...
Can be me.
Can be you?
Can be anyone, whoever gets the mail. And typically we have an info at Acton, but that's used least. Most people reach out to a certain person, and so if I get a pitch deck, I'm the one who reads it. And if I'm interested, I check whether there is someone else joining me, and then we have a call.
That's interesting, because I would have thought you give that to like some junior person and they pre-filter it and then they only give you the best ones. Or
yeah, that's probably a difference between later stage and early stage, because for us the market is nice, because the market, it starts like that and then it filters. That's what's left over when you go to a series A and B. So we have much less companies that we see, so I'm fine with digging deeper into it and reading it. While when you're at early stage, you have that many companies, there you have to be prepared that a partner might not have a look at it at all, but one of the juniors is checking each and everything. Even there it has to be important, even more important, to get attention.
Yeah, I think so. In the early stage, you probably have that sort of, you should always assume the person you end up talking to maybe in a meeting hasn't seen the pitch. Because I've been told by startups, and you don't have to listen to this, but I've been told from startups that they came into investor meetings and they realized during the meeting that a person in the meeting thought they were a different startup because they had misunderstood or they hadn't read the email was sent around, they hadn't seen it and whatever. And then there was they were talking, they were asking questions that were clearly not for this startup, and then it was very awkward. And I've heard this multiple times. So that stuff happens. Always assume, especially early stage, people have not heard your pitch and they don't remember. So how long is the lead time between you see a pitch deck and then you might have a conversation with a startup? Is that also a thing where it takes a while and then you have to sort of be reacquainted? Maybe even the startup has changed something in the meantime?
No, typically it's a question of days. So when you get a pitch deck, it's attractive, then you reach out, react and say, let's have a conversation. Once in a while there's a doodle in there or a Calendly, and you immediately check, make an appointment. But it's getting in touch is easy.
Okay. We've talked a little bit before, and we realized that we both think that pitching startups, pitching investors is very similar to dating. And you already alluded to that a little bit earlier, where it's like you're looking for a life partner. And somebody has actually once told me that if this is the amount of time and effort you should spend on finding the right life partner to marry, this is the amount of time you should spend to find the right co-founder, and this is the amount of time you should spend to find the right investor. Basically, because having the wrong investor would make your life even more hell than marrying the wrong person. I don't totally agree. I don't know. Maybe it's true, but at least it's funny. But what we realize is we both think that there's sort of a similarity between dating and pitching an investor. So now the question for you, if you see a pitch deck and you get excited about it, and then you have like, you do the Calendly and you have a call like in a week. Do you keep thinking about that startup like you would after like a first date with a person you really liked, and then the second date is a week later and you're like all jittery when we were teenagers, maybe not at our age now, but when we were teenagers? Or is it like, no, you forget about it because there's so many startups, and do you carry that around with you and you're like, I'm waiting for that one, that sounds amazing?
If it's really attractive, yes. Yeah. It's something that gets you excited. You want to get in there. You're really looking forward to, and you hope that the first glance is not gone when you have that conversation. So it's not only having an attractive pitch deck, but also make sure that afterwards there's a lot of background behind the story. Because if it's only a very nice, attractive company at first glance, but thereafter you feel like, but you are excited, and once in a while it happens. It's not that attractive, and once in a while you feel like, that's okay. Let's see. There's something interesting in it, but I still don't get it. And then after you talk with the founder, you really get excited.
Yeah. Yeah, and that's just like dating. Sometimes the first date is great, and then on the second one you realize you were drunk the first time and it isn't working out that well, and sometimes the first one isn't that good, and if you're lucky, the second one then works out better, if it comes. Okay, so now I want to go back in your life a little bit, because you were an entrepreneur yourself. How was your relationship to pitching? Did you like it? Did you do a lot of it? What are your memories? And when you see somebody pitch you, do you think of those times when you were in their shoes and like how maybe hard or how awesome it was? Maybe you loved it?
I was lucky. I didn't have to pitch much, because I only had one pitch, and that was easy.
And then IPO. So here's a person,
really,
one pitch,
and then IPO.
And then IPO. That's how you do it.
But
okay.
that was a different time. We IPO'd after 19 months of existence.
Okay.
But that was in the 2000. So that was different. You could also IPO Frenchfries.com, would have gone. But my company is still alive.
So that one pitch you did, good experience, bad experience, neutral?
It was very good, because I knew the VC, the head of the VC, and I knew that he was very much into all the exchanges, into checking different companies, and that's exactly what we did. We provided all that information, and I knew he would love it, and he would love the product, and so it was easy to convince him that this is a great product.
Yeah.
And that worked.
Okay.
So it was easy, but that was lucky. So I'm not really good in telling a lot about my own experience as in pitching, because I never had to.
Because you didn't have to do it. Okay, so I think that's the best case scenario for any startup. If you don't have to pitch, then you don't do it, right? It's not something that you do just for the fun of it, but if you have to do it, then you have to do it well, so that it ends up working.
But there's one thing I think is important that was helpful for me when I did the pitch. Think of who you're pitching to. Who is the investor you want to address? So if you're early stage, don't take such a pile of VCs, and there are 20% or even 50% of them are later stage. Focus on the ones that are in that category that are really now relevant for you. And also think of, go to their websites, check what is their idea, what is their focus. Do they go extremely high risk, or are they a bit less risk, a bit more risk averse? Do they help you shaping something, or do they push you? Are they investing in your space? It's so much more helpful if you have a better selection before, because otherwise you get so many no, and you're frustrated. It's much better to focus on the ones you're really interested in.
Let's keep that thought, because I want to talk about stalking in a moment. But we have a question. Where are our microphone people?
No, it's there.
Oh, it's already there. Ask ahead, but it's not on.
Yeah. Sorry. You insisted a lot on the fact you wanted to understand what problem is it fixing, but we also know that the hard part is executed. How much of this execution capability do you expect to get within a pitch, or is it later on that you want to understand this?
Execution. How, like you said, it's about the problem. You want to understand that first, but then how much about how they are planning on executing it should also be in the pitch.
I think, of course. So the first thing is, what problem are you solving, how you do that, and why you do it better than others. That can be execution. It could be better quality, can be lower cost. If it's only lower cost, I'm always a bit skeptical, because that's always a bit more difficult. And it can be that you just solve something that nobody has solved yet. But if it's only on the top line, and we dig deeper, and I would try to understand how you do it, and I see, oh, that's a bit weird. How do you do that? And then I really try to understand. We never invest in anything that we haven't understood. So I really want to understand each and every process, how you do that, how you go into it. So after you've sent me the pitch deck, the first call typically is not 20 minutes or so, but at least an hour, because I really want to understand how you're doing it, what kind of challenges you're facing. And I probably have thought about a couple of things before, and then we'll ask you, but how do you do with this problem? And how you tackle that one? And how do you really get deeper into it? How do you get your customer? Customer acquisition, how does that work? Is it sales? Is it marketing, combination? How much does it cost you? And then what are channels that you're working with? So I really go into it, and it's fine if you are not perfect. There's nobody perfect. But it's good if you show me what are you doing really well, and if you also say there are still some challenges that we have, or we're going to cope with it. Because you're a startup, you're not perfect and have already done everything. But I want to see how you want to tackle things and how you're executing. And that's, of course, more important for someone like us who are a bit later. If you're in the very early stage pre-seed, well, then you only can tell how you think about it. And it's helpful, you have thought through a couple of things, how you want to solve these things, so that the other one, the person on the other side has an impression, that sounds plausible. That sounds like they have talked to customers. They know what they are doing. It's not just two people and a business plan, but it's more.
I have a question that connects to that, because you said the first meeting would be an hour. That's maybe a little bit shorter for earlier stage startups,
yes, probably,
right? So
yeah.
the first investor meeting would probably be a little bit shorter. How much time do you spend with a pitch deck, though? Because there's always like data on the internet that on average investors look at a pitch deck for whatever, 91 seconds or whatever the science says. But how do you deal with that? And do you know about earlier stage investors? Do you spend way more time than them because it's sort of less companies that?
The first thing I try to understand is, does it make sense for us? Once in a while it's too early, or it doesn't fit because we don't invest. Then after 30 seconds, I know, and I don't have to go through the whole pitch deck. I know it after the first couple of pages. If it's interesting, if it's something we would invest in, I read the whole pitch deck and I take my time. That's why I like the pitch deck to be straightforward, addressing the most important points and helping me to understand. But then it may take half an hour, that's fine. But typically, probably it's between 10 to 20 minutes.
Okay, 10 to 20 minutes.
But it's definitely not an hour before I have the conversation with the person. Because it's not necessary to put up, once in a while we get decks, if there's an investment bank involved, you get decks of 60 or 80 pages, and you feel like each and every page could be split up into 3.
Yeah.
It's a nightmare. I think all the investment banks, they love it. I don't know anyone else who loves this kind of document, because it's so dense. You have to concentrate and say, what is this and now here? And why not easily make a chart where you easily understand the story, the key points? I don't need everything in the beginning. When we come to the conversation, then we can dig deeper in anything. But just try to help me understand what you're doing.
It's interesting that you say that, because you are an ex-consultant.
Yes.
But even you don't want like the full analysis of every single thing and like everything until the 100th detail. Okay, now let's get back to stalking. Because I sometimes half-jokingly tell startups that if you have a conversation with a specific investor coming up, you should stalk that investor online or try to climb into his garden to check him out, whatever. But you want to find out what the investor thinks, what the investor likes, what the investor doesn't like. Because I think the best way to tell a story to someone is if you know that person. Now, of course, I'm saying that as a little bit of a joke, but understanding your investor is probably valuable. So I want to ask you the question, are there often cases where you like a startup's pitch that you see and somebody else in your company absolutely doesn't like it because you're just different people with different experiences?
Absolutely. So I think there are 2 points to it. Do your diligence and reference calls on investors. And not just on the team, on the company of the investor, but on the team. So that's something you always should do. Not necessarily in the very beginning, but once you get to know them and you think of a term sheet or something happens, do your homework and try to get to know them. Before, try to understand what is the range they're investing in. Do they fit to me? But you don't know who you're talking to. It doesn't help to stalk. And even don't think you should tell me something that you think I would like to hear. No. Please never tell me what I'd like to hear, what you think I'd like to hear. I want to hear your story. The worst recommendation, and I've heard it very often by investors who are in the company, is tell this and this and this story. let's say we go to the US. Next year we go to the US. You don't want to go to the US, but it's selling better. No, then don't tell it. Because at the end of the day, you might find an investor who is liking that idea, and then you have to do it, but you don't want to. So don't tell me a story that you think I'd like to hear. Tell me your story. If you believe in your own story, that's most important. And there are some people, some founders who even think there are some investors we should tell this story, for some we tell that story. Investors are also talking with each other. Have a consistent story for yourself. Don't try to please me. If I'm interested in what you really think, what you really want. And there are good parts and bad parts. Don't worry, I'm not expecting the perfect thing. But it's really important that it's your story and not the one you think that sells better. It always crashes.
Have you ever been talked into investing in a startup that you didn't like in the beginning? Where either the startup or somebody internally made you believe in it? And I'm not talking about you didn't understand it yet, it took a little bit more time to understand it, but was there ever a case where persistence led to you saying, oh yeah, let's do it, when you first didn't want to?
Yes, it can help. I have to think there has been a company that we've talked to a couple of times, and it never worked well, but they were persistent, and at the end of the day we invested, yes. But it's rather the exemption. It's not the typical case. Also, when you go out there and try fundraising, once in a while your valuation expectation is too high, then you get no. Don't try to go to the same investor again 3 months later. For them, you're off the shelf for the time being. They want to see something more. It's so much harder. So valuation, I don't know whether you want to get to valuation anyway, but valuation is an important thing. It has to fit. If you're thinking, oh, we could raise something like 10 million. So the typical calculation an investor makes, okay, if they want to raise 10 million, they think of a pre-money valuation of 40. Because typically you expect a 20% dilution. So pre-money valuation of 40 may be much too high for what the company is right now appearing to us. And so we say, though, if we would go for 30, probably we are out. No, that's not interesting. And then you hear several times the no. And then you feel like, okay, we better go out there with maybe 5 or 6 million. But all the ones you have talked to, for them it's much harder to give you another appointment. Maybe they do, but it's the rare exemption. And you yourself, you don't come like, have something, but you come, yeah, we have thought about it, and I think we should do it. Your own self-esteem, your own appearance is completely different because you have all that kind of disappointment behind you. So when you think of trying to raise 5 to 10 million, then don't start with a 10. Start with a 5 and say 5 plus. That's much easier because it's much easier to raise more than to raise less. And the communication is different. I think that's something you always have to be mindful of. If your price is too much out of range, it's really devastating for you and for the whole team because you spend a lot of time and you always get negative feedback.
Okay, now I have a bunch of questions. Do you ever talk startups into raising more? That you say you shouldn't just be raising X, you should be raising twice that?
I don't think so. Rarely, if so, very rarely. Okay. Because I don't believe in. There's another thing. A bad pitch deck shows there's some inconsistency between the deck and the business plan. The deck tells me I want to have 10 million. The business plan says there's a negative cash flow in the next couple of years in total of 2 million. So what do you need 10 million for? And that's what...
Office parties.
And I think I need to understand your story. I need to understand what you need the money for. And so I believe in the deck, but the deck should be consistent with what is in your business plan. If that doesn't work, then once in a while I hear the story, yeah, but this business plan, if we don't get any money, okay, and where's the one where you get money? And you don't have that typically. And so please always have a business plan where you expect that the money is there, and it should be roughly in line. Of course, there can be always a buffer. It doesn't have to be exactly, so nobody goes and says, I want to raise 3.876 million. No, but let it be somehow in the ballpark that everything is kind of consistent.
Yeah. Okay, so we have 5 minutes left. Are there any more questions from the audience? Yes. Here and back there, but maybe we start here.
Hello. What data are the most interesting for investors when pitching in a very early stage project? For example, we know the most common are the number of customers, for example, but for sure there are other data.
When you're very early stage, you don't have any customers, what's the most interesting for an investor?
For me, it's important, what is your idea? It's always the same. That really doesn't change between early and late stage. What problem are you solving? What is the pain point? Talk to me about your product, your idea, and about the customers. If someone is only talking to me about the product and he never talked to any of the potential customers, I feel like that's not clear. I really want to feel, is there a pain point you're solving? And then show me, what do you expect in terms of how much it will cost, how much can you, what will be the price that you're expecting, and how does the product work? And the earlier, the more you have to tell your story. But be aware that the investor not only looks at that, they also look at you and your team. So if they want to see the founders. A great founder will be able to have a mediocre product and make something great out of it. A great product with a lousy founder doesn't work. So founders are, in particular in the beginning, but throughout the story, they're always important.
Okay, we do you first because you already have a microphone, then we have a question back there.
Yeah, sure. Thanks. So what kind of validators are you looking for market projections from the founder?
Sorry?
What type of validators are you looking for market projections from the founder, right? Any pitch deck is going to give a projection on the total TAM of the space that they're intersecting in, right? Do you look for validators of those projections, or do you just more or less trust with the founders telling you?
No, we never trust. Well, of course we do trust, but we also check. And for us, the first thing is I need to understand the need and try to get a plausibility. Is that a real need? Is that a need for just a niche, or is it a big market? And try to help me understand what kind of customers you're approaching and why is it a need? And I would ask you, so what are they doing without, if you're not there, which you are not yet because you're still proposing a product. So how do they solve the problem now? And what is your idea how you could solve it? And then I would go deeper and try, I'm not early stage, but I would do even in an early stage, would try to understand how you're tackling it. How much have you thought through it? Is it just you have 20% or 80% of the solution in your mind, but the hard part is the last 20% making it work. And so then I will ask a couple of questions, really understanding how do you try to organize that? How do you get that? So I have to get an idea of the market, the customer, and there ideally you can show me that you have talked to customers. Or ideal thing is you have experienced that pain point yourself. You know it from your own experience because you have done something and something completely different, and all of a sudden you see that's such a pain point, I now have an idea how to solve it. And that's very convincing. But still, I need to understand not to the very end, but more deeply how you want to tackle it. So that it's a lot of plausibility checks in the beginning. You have to be, there will be trust, but there will be also challenging questions because people want to understand what you do and how you do it.
We have more questions. You already have a microphone, right? No? We only have a minute left, so we have to hurry up.
Quick question about the valuation, because for us, we were bootstrapped, we did a pre-seed, we don't really know what the valuation is. You know, it's a guessing game.
Yes.
We know what we want. We want 4 million, but we can easily use 6. So it's really hard to give, you know, the exact number of the pre-money valuation. That's my question.
As I said, whatever number you bring up in terms of money you need, the typical reaction of the investor is multiply it by 4. So that gives you already the ballpark. Now, if you feel like, so it's helpful to check some databases, what are other companies that are in a similar situation as you, or talk to other founders, talk to other places where people are in accelerators, just talk to other people and try to find databases where there are similar companies, what kind of valuations they have. And if that's an indication. And if you feel like if there are many investors coming towards you, you can also raise more, but don't overput it in the beginning.
Okay, we can get one more question, but you don't want to. Do you want to ask? Okay.
To be brief, so you talked before that the team and the founder is really important.
A bit louder, please.
You talked before that the team and the founder is really important,
Yes.
a good team. So what are the characteristics, or where are you looking into a team or a founder or co-founder?
It's a lot of different things. I want to see, is that a person I can imagine is a leader? So can he impress people? Does he have a good vision? But not only a vision, but also the capabilities of execution. Is that, and you only can look here. I don't know what's behind. Do I have an impression that he's trustworthy? Is that a trustworthy person? Is a team working as a team? I've seen a presentation of people where they were fighting with each other, or the other one was, one of them was saying, no, forget about what he was saying, that's bullshit. This is a sunny situation, you're not in a thunderstorm yet. I'm imagining what happens if that team is in a thunderstorm. I want to see, are you resilient? Do I have the impression that you can build something that is not just small, but gets bigger, and really great? Is that something that I can imagine? And of course, we never know, because once in a while, I have a different impression. It's like marrying. You have a lot of impression of the other person, and all of a sudden, no, it's different. But I think it's important to be as authentic as possible, because at the end of the day, you and your founders, you will have to do it together, and it's also marriage with us, at least for time. But we want to. If we invest, we provide you the benefit of the doubt. And then we are trying to get your trust because we want to do it with you together. But what is important is that you as a team do convince us for the vision, but also for the execution and for the leadership and I only can recommend all of you founders one thing. I was lucky. I was 12 years with McKinsey. I had a lot of trainings in my job. I had other people I could look up to and learn from them. Many of you start from university, or maybe even not university. You start without having any own work experience. And you can learn from heaven. There's nobody above you. Don't hesitate to do trainings. Don't hesitate to ask for a coach. That costs something, yes. But you may be natural talents who can do everything. But don't underestimate, there's a lot of craftsmanship, and you can learn that, and it's helpful. So don't think it's bad if you take that training, that coaching. It's really helpful. And it's never an indication of weakness, it's an indication of strength.
Excellent final words. You've earned the case of wine I offered you for exactly that final message. Thanks to all of you. There was one more question over there. You can come. You're first in line because, as I said, Fritz was going to be around for 5 hours to answer all questions. Should people get in touch with you if they have a great Series A, Series B startup?
Always.
LinkedIn, email, how do you prefer that?
LinkedIn, email, Fritz @actioncapital.com. Feel free to send me your deck also if you have questions. Just one thing, don't send me, we are doing this, and you will get the deck after we talked. That's one of the things you never should do, because it's taking your time and not taking my time, the level of uneasiness is already raised if you just say, I sent you the deck once we have talked. It's much harder. For me, the hurdle is higher. Sorry, haven't talked to that.
Fritz, thank you so much. We could talk about pitching for a long time, as you can tell. Big applause for Fritz. I only had one final question that I wanted to ask, but we don't get to it. I wanted to ask, is it a good idea for people to pitch naked? But we'll discuss this next time, okay? You have to come again next time if you want to get the answer to that question. And now, back to you, Sibila.
Fritz, Christoph, thank you so much for such an insightful discussion. I think we learned a lot. And as Fritz mentioned, well, yes, we can go for fundraising, we can go for sales, but you cannot do that alone. You need the team, you need the culture, because that's the only way we can go all together further. And we're going to be back on stage in 5 minutes for exactly that discussion on culture, people, and skills in the era of AI. In the meantime, while you have time, I invite you to sign up for tomorrow's Open, the competition that's going to happen 12:30, or visit our top finalists of pitch competition that's just behind the corners, and see you in 5 minutes. Thank you very much.